Well, hi, everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter, and this is August 5th, 2023, and these methodologies are based on the book Buffett and Beyond, second edition. And remember, for those of you folks who have not tried our two-week free subscription, just go to buffettandbeyond.com. Buffett and Beyond is spelled, Buffett is spelled with two F's and two T's. Buffett and Beyond is one word, buffettandbeyond.com. Get a two-week free subscription. See all the archives of our ETFs, of our daily letters, and you will receive the daily letters in your email each week for 2 weeks, folks. So sign up for that free subscription. Meanwhile, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. And this week, the market had a tough week as the U.S. debt was downgraded and a big rally fizzled on Friday. Apple certainly didn't help, even though Amazon more than made up for another revenue decline from those iPhone folks. Yeah, this is like the third quarter that Apple had a decline, and so therefore the market did hit on Apple, but Amazon rose almost 10%, folks, just on Friday. And our weekly stock analysis video, Caterpillar, is certainly showing the world that tough is good and big is better. What a good stock with a worldwide market. 52% or so of their sales come from overseas. And the ETF video, the top 5 stocks in the transport ETF are up 45% so far this year. And folks, it's a good sign that this index is leading the S&P, and even better that the top 5 stocks are more than doubling both the ETF and the S&P 500 index this year. And let's look at the S&P 500, and that top red band and the bottom red band are volatility bands, and they're named after John Bollinger, so they're actually called Bollinger Bands. The center line is the 20-day moving average, and you can see that we have fallen down below that 20-day moving average a couple of days in a row. So the next stop is probably down here around a little above 4,400. And the good thing is that these bands have not started to widen yet. And usually when you get a big decline, these bands start to widen out, but right now they're closing down a little bit, so that's a fairly good sign. Down here, the intermediate term indicator is certainly pointing down, so we'll probably see more weakness in this week, weakness in the week coming. Yes, folks. And here's the S&P 500, and you can see that the downturn here, this is the 50-day moving average. But what I want to show you on this chart is down here, these red vertical lines represent the volume when the market is down for the day. The gray lines represent the market when the market is up for the day. But down right in here, we can see that these lines have not grown bigger or longer. Because that means there is not a lot of selling going on. Well, there's selling going on, but the selling has not increased. So people out there are not panicking, and that's a fairly good sign. But again, the intermediate term indicator is definitely pointing down. And when we look at the QQQs, this green line is the 20-day moving average, and we can see that it has fallen down below this 20-day moving average 3 days in a row. And you can see down here again, these red lines, that the volume has not increased. In fact, the biggest volume we had was on Wednesday when we got that surprise drop. But Friday, it did not pick up, so we're happy about that. But this indicator, intermediate term indicator, has been pointing down for almost 2 weeks now. As we indicate on our daily letter, we bring this point out quite a bit to show that, well, every day we bring it out, that this is pointing down, and it was the first of the big indices to start turning down. And that's where the tech stocks reside, and that's where the semiconductor stocks reside. So that's what we're looking at here, folks. Now for portfolio protection, we have portfolio protection out to October. Yeah, the July puts have expired, and now we are out to October, which is not shown on this chart. But we have August puts, September puts, and August puts, which would cover this portfolio about 8% below the present level of the market, and then we would be totally covered because this is about $135,000 portfolio, and we have the 3 puts in order to cover that, about 8% below where we are or where we closed on Friday. So yes, we do have the October put in here, which is not shown. Sorry about that, folks. And I just want to show you the results since we started in 2002. So we're looking at 21 years of returns. And on average, our 30 stock portfolio returns about 16% a year, with the S&P up about 9.7% per year. So this is the kind of portfolio that is buy and hold, with changes, if any, and rebalancing taking place on the last trading day of the year. Actually, the week between Christmas and New Year's, the market's slow, everybody's on vacation, they're all out shopping, and the market's nice and slow, and we make those changes. It takes about a whole 5-10 minutes, and we send out those portfolios that we want and the changes that we want and rebalance. And so when you compound these returns over 21 years, the portfolio, our 30 stock portfolio, pretty much buy and hold, except one change, or we change once per year, about 5 stocks out of the 30 stocks, and it's up over 1,000%, with the S&P 500 up about 377% on a compounded basis. Had you left money in December 2022, started out 2023 nice and fresh, these are the returns you would expect. And if the past is any indication of the future, that would be nice. But we continue to outperform, and this year we are more than doubling the S&P 500. That's our 30 stock portfolio. So, folks, we had a tough week this week, with the market finally breaking down a little bit. Volume has not picked up, so we have good hope for this week. It should be an orderly decline because things in the economy are actually getting better. So you go out this weekend, you have fun, you do what I do, get a cup of coffee, sit in the shade, and watch the beach. So you have a good weekend, you have a safe weekend, be with your loved ones, and folks, we'll see you back here on Monday.